And it's actually a roadmap of incentives for business owners and investors. But you just know how you need to know how to, put that into place.
What are some strategies you guys are using for to be more tax efficient and to kind of keep that return?
Yeah, sure. I mean, and I've got a lot of experience here. I mean, this doesn't just come up. This isn't something that I just came up with, right?
Yeah.
I spent many years building a business, and then come tax time, writing really big checks to tax preparers, then not even knowing actually what my tax liability was,
Right.
and having to scramble for capital, come April. And then, on top of that, writing six-figure checks, right? The more successful you become as a company, the more taxes that you're paying. And again, that entrepreneur, that problem solver in me was just saying, there's got to be another way, right? I mean, and Kiyosaki kind of talks about it, but what's in reality? How do you really put this together? And I fired actually 5 different accounting firms over a course of about a 10-year period. And I finally ended up I was actually working with Tom Wheelwright's firm, Provision, who just completely changed the way I think about tax, right? And the tax code is 6,000 pages, right? But there's only one page that says, you must pay tax. The rest of the pages are all about tax incentives, right? And it's actually a roadmap of incentives for business owners and investors. But you just know how you need to know how to, put that into place. And if you work with a proactive tax planner, they can build a strategy around, around your business, around your life and what you're doing, so that you can be properly structured to take advantage of things. And I'll give you a simple example, right? So, and I eat my own dog food with this strategy, right? We created a vision, my wife and I, we wanted to go to Italy and live in Italy, buy property. So we bought property there 10 years ago, and we purchased it. We bought a multifamily house that was kicking off income here in the US that paid for the property over there. And then our kids were in the business. So we've been flying to Italy for the past 10 years for our vacation, which is tax deductible because we're going to see our asset, right? And, doing improvements, getting kids involved in the business, which is excellent. They've gotten to, learn new language, new culture, things like that. So, that's one very small, tactic, right? But understanding how taxes work and everything and what the incentive is, you can position yourself to, really become, efficient with you. Another example would be, again, some of the assets that, we're looking at, right? Such as, real estate, self-storage, things where, you can typically depreciate maybe 50%, as high as sometimes 90% of an asset value of your investment right into the property. And when you see what that does to your IRR on a return, it's very, very huge. And I've also, exited a company myself. So I know the DST is a phenomenal strategy, right, for certain parameters. But in addition, anytime that we're having, capital gains, things that we're working through, we're constantly buying, right? We just keep buying assets and keep resetting the clock on depreciation.
Yeah, absolutely.